Hey, what's up, guys? This is Sam, and we're going to be covering a couple of things today. So I'm not sure how long this thing takes to get started here, so let's give it another minute or so. Just get confirmation from a couple of folks that we're all set, and we'll get on our way here. Okay, looks like we're all good. All right. So first things first, thanks for you guys for being here. Appreciate it. It's always oh geez, there goes my own voice. All right. Let's turn that down. All right. So maybe there's like a 30-second delay there or so. But I think we're all good here. So I'm going to still give it another minute or so just because it is on a delay. And then we'll dive into a couple things here that we're looking at to start the week. As long as we go along, if you guys have any questions either on YouTube or on Facebook, just let me know and I'll be happy to cover it. But we'll go ahead and get started here probably 30 seconds from now. Just about 30 seconds from now. All right. I think we're all set here. All right. So thanks again, guys, for tuning in here, either on YouTube or on the Facebook. Appreciate you being here, especially after hours. So the topic that I wanted to cover with you guys today is going to be trading the market that you have, not the market that you want. There's been a pretty drastic change in the markets lately, as I'm sure you've all noticed over the last couple of months. You really see it in tech. I mean, tech is in a full-blown crash in certain spots, and then you have things like energy or maybe some consumer staples, fertilizer, things like that, agriculture names, still doing pretty good. And we haven't seen that. We have not seen that in probably 13, 14 years, right? For the last 13 years or so, we've seen the tech names, the Amazons, the Teslas of the world, the Apples, really lead the action. And we're starting to see that change. So why is that? Well, a lot of it has to do with obviously the interest rate hikes, and as a tightened monetary policy from the Fed, that makes those really expensive growth stocks much, much less attractive. And it also brings down their multiples. So you start to get, some decimation there, and some of the higher beta stuff like the Pitons of the world or the Zooms of the world. But there are a lot of bright spots. So since it is a little bit of a big picture topic that we're going to be covering today, again, I invite you to leave any questions you may have in the chat, and we'll get back to them. I want to start kind of with the biggest picture that I have here. And I think this one really just, if nothing else, it makes it pop. So a second here. I'll pull up my Twitter page. All right. So this is one of the last posts that I made on Twitter, and this is probably the biggest kind of signal that I could possibly bring you here. And what it is it's going to be the NASDAQ, the triple Qs, and this is a monthly chart. And what do you notice here? Mostly focusing on the lower indicator, right? We have it as simple as can be. We don't even have moving averages here. And if you look back here, this is 2009. So this is right after the financial crisis. The financial crisis ended on March 9th, 2009. And you started to get some buy signals, right? You can see the buy signals back here on the Qs. And this is a monthly chart, by the way, monthly chart of the QQQ. And you got those buy signals back in 2009. And pretty much since then, you see all these buy signals, you have not gotten a single sell signal during the entire run of the bull market for 13 years. Exclamation point. That's a long time, folks. That's a really long time. What do you see right now? You have your first sell signal in 13 years. So what does this tell me? Well, does it mean that the market's going to do this? Probably not. But what does it mean? It tells me that the party's over. It tells me that the easy move of just buy and hold, every day goes up, just close your eyes and buy, those days are over. And if that is the case, then we have to adjust to the market that we have, not the market that we want, right? That's always the main thing with markets is adjusting to what you have, not what you want. So I wanted to start here because this is the big picture, right? So don't forget this. This is obviously, in my opinion, very important because it's the first bear signal in 13 years. So we're going to look at a couple of charts here, and I invite if you have any takers you want to look at, just throw them in the chat and we'll take a look at them. But I want to cover this as well with you here. So as a trader, you need to have, in my opinion, kind of three speeds of thinking, right? You want to have a kind of a long-term point of view, which would be based off like a weekly chart, usually, maybe a monthly. You want to have an intermediate term point of view, which is based off the daily. And then you want to be able to, especially in this market with the volatility, you want to have a shorter term point of view, which is usually like an hourly, right? So again, I'll just make the point to try to think in three different speeds, kind of a weekly, monthly, a daily, which is where most people land, and then maybe something like an hourly, right? And the best trades happen when all three of these speeds are all hitting at the same time. So we just saw that we had a sell signal on the monthly chart on the Qs. Therefore, because it is the biggest possible time frame that we would look at, that colors every lower time frame signal a little bit more bearishly than it would. For the last 13 years, you've had bull signals on the monthly chart. So anytime that you look at a daily chart, those bull signals from the monthly are feeding into the daily. And that's how you end up with these nonstop kind of 13-year long bull markets. But we just don't have that anymore. So let's just cover this briefly here. I'm not going to read the whole thing because there is a lot here, but I just kind of wanted to show you what we're looking at going into tomorrow and into the end of the week. This is what I call worry of the week. This is kind of the prep work that I like to do mostly for myself, but then I also send it out to the members so that they can have prep work. They know exactly what to look for. They know exactly what to chart, or excuse me, they know exactly what to trade, and we kind of do all the work for you. So briefly here, nothing has changed this week, but things have shifted. If we focus on long term, which I just showed you, the charts collectively appear to have taken irreparable damage relative to what the central banks are doing, relative to the central bank tenor. The target on the SPY remains 350 to 340. So keep that in your back pocket. That's not going to change unless something very drastic changes. But the target on SPY remains 350 to 340. However, we're here to be traders, right? And as traders, really what it comes down to is just timing. So we also have to understand that even though we may have a target of 350, 340 SPY, we could also go intermediate term or short term before that happens. So tomorrow, hopefully you're all aware, we have both the ECB as well as the Fed talking, specifically Powell. And that's probably the catalyst to either send the market higher or to go ahead and just break it here and now, even more so. Right. So tomorrow's kind of a big stakes day because of where the charts are, as well as because you have the central banks talking. One quick point that I'll make, because we do have a relatively diverse audience joining us today of folks that might have just started trading or maybe folks that have been trading for a long time. The only thing that matters right now, it's not Russia. It's not a meteor hitting the planet. It's not anything like that. It is the central banks. Always, right? They are always the elephant in the room, so you must always know what they're doing. So they're going to be both speaking tomorrow, and tomorrow is either the day that we have a relief rally or not. So let's finish up with the notes here. The potential for a balanced relief rally is at the highest that it has been at these exact levels coming into the week. But we do need to see another card because there are a number of ways this could play out. So we just saw another card today. So far, it's fine. but again, tomorrow is the day. Blah, blah, blah. So let's cover these two sentences here. Almost everything this week is a common pattern, and I invite you to find this on your own, right? You're going to see it in QQQ, you're going to see it in SPY, you're going to see it in ARC, you're going to see it in Amazon, you're going to see it in everything. Even if you look at the internals, you're going to notice the same pattern. And the pattern is a weekly hammer candle, large volume, positive hourly momentum divergences into a new low. So momentum actually went higher as price went lower. And often often this is all happening at key longer term support levels. The momentum is pretty bad. So signs of early capitulation are present in a lot of markets at once. Here's the problem. So this is all shorter term thinking. The problem is that there's no actual triggers in most cases, right? So the trigger will come tomorrow, long or short, but there's no trigger as of right now, even today. So we enter next week so as we enter next week, we have to have an if this, then that mentality, because things will have to be monitored as they develop into the central bank Wednesday catalyst. So I put a couple more things here. You can go back and watch that if you care to. Let's go to the very end here because we just cover the different things that I was looking at, and let's cover kind of the plan for the week. So because that's the plan, I want to not only, I do this for myself really, right? This is my plan of the week, but the more that I put it out there and the more folks are looking at it, the better and better it has to become. And not only does it have to be helpful to me, but then it has to be helpful to a wide group of people. And in doing that, it forces me to have to be even more accurate, or at least have a plan either way, right? That I can share with myself and share with you guys. So most things do look bouncy into next week. However, if they don't bounce, there's nothing under the markets from here. So in the event that Powell and ECB come out tomorrow and kneecap the market, there's nothing under the market from here, folks. It's just a huge pit of unsupported gravitational pull. The odds in my favor the bounce scenario with a focus on the XLC pattern. There was a couple of bottoming signals that I saw in XLC. The reason I want to focus on XLC is not because I'm trading it, I'm not, but because XLC was the leader going up, and therefore it was also the leader going down. So I'm trying to see if XLC can stabilize as a sign of early stabilization across the market. The bond market looks like it wants to put in a short-term low. The VIX had a couple of sell signals and market-wide weekly hammers. This says Wednesday. It should say Tuesday because it's tomorrow. Tuesday is likely the catalyst with both ECB and Fed. This is really important if you've just started trading. Remember this for a long time. The same rules apply as last Fed day. Remember that the real action is not the day of Fed day. It is the day after. So tomorrow is Fed day unofficially. Make sure that whatever you do, that you are prepared for Wednesday, the day after, because that's really when the move actually happens, long or short. So don't, if it goes up tomorrow, don't think it's in the bag. If it goes down tomorrow, don't necessarily think it's in the bag. The real action happens the day after. For those of you that are bearish, and I would assume it's a lot of you, one question for us to consider: how high can this really bounce if everyone wants to short the bounce? Kind of an interesting experiment there. And then lastly here, I prefer day trading into Tuesday. Remember this, I have this wrong. This is Tuesday. I prefer day trading into Tuesday and then considering a 1 to 2 week swing long trade if the indices perform as we laid out. Sectors like XLE, energy, don't care unless the market is truly puking. So keep your focus there, as it would take a lot to knock down those setups. You want to be in the strongest possible boat right now. And the strongest possible boat that I've seen is XLE and its components. If the SPX breaks gap support, then we have a different animal on our hands. And then I give you the sectors to focus on. You want to be long XLE, USO. Keep in mind, this came out yesterday. XLP, wheat. Keep an eye on wheat. And then for a kind of a dark horse this week, semiconductors. I also give you the watch list as well as the longs for the week. So I'll leave it up for a second in case you want to grab this, but I did want to quickly share this with you because we're going to be covering it more on Wednesday. So let's go to the charts here, because that's what we're here for. And again, if you have any questions, do drop them in the chat and we'll take a look at them. All right. So, how high could we bounce? Well, keep in mind, right now, this is very similar to a poker hand as I see it. The bulls have a little bit of an edge, and it's very small. And it could go away in well, even how do I say this? The bulls have a potential edge, is probably the better way to say it, because the bears own this market right now, right? If you look at the weekly chart over here on SPY, you see how all your moving averages have crossed down through the 50 week. That's not good. Also, you see the same buy signals that I showed you a while back. These are on a weekly time frame this time. These buy signals came in after COVID. So they came in right after the COVID lows. You see how the same dynamics applies, where you got the buy signals after COVID and you went almost 2 years without getting a single sell signal until right there. So again, that's important. Here's what's really important. You got a sell signal on SPY weekly after 2 years. You got a buy signal down here, and then it was almost immediately canceled out with a sell signal. That's the first time that's happened in probably 13 years. Right. So again, this, I cannot tell you that this is a bullish market. It would be there's just no foothold for that idea to even come out of my mouth, right? These are all sell signals here. So you would be correct to be looking for a short to a bounce to short here, in my opinion. My only question is, can we get a short-term squeeze back up to about the 618 of the recent high to low drop, which overlaps very conveniently with where we would be looking anyways, which is the 21-day moving average on SPY, roughly right around 414, 415, right? So it would be a lot cooler to be doing this tomorrow because we'd have a little bit more information in terms of what the central banks are going to say, but that's kind of the general idea. So the thought process is the market is actually good all the way back to this gap. Below this gap here that was opened up at the lows, that's where I think the market would be in trouble. So we do have to see the market try to bounce here. And if it does, then the natural place for it to try to bounce to would be the 21, and then we take it from there. But again, you don't want to be overly committed here to this spot, and this is why we put in the notes that it might be easier to day trade, not just today and just tomorrow, but maybe actually into Wednesday, just to let the market reveal itself to you fully here. Because right now they are trying to create a short squeeze. It is not very easy to do in front of the Fed, but then tomorrow we'll have a little bit more information. So just wanted to kind of touch base with that stuff, kind of show you the story of the week here, show you what we're looking at, kind of give you at least a little bit preview in terms of what we're looking at this week. Go through and just check those out, and then check out our watch list as well. I think it's pretty good. I've curated it so that it only has the best stuff. And then for those of you that haven't seen the signal, maybe somebody can drop my Twitter link there in the chat. This was the last thing that I posted. So again, even if it bounces, it doesn't really matter too much. Just remember, this is actually the bigger signal, and just don't forget it, right? Because there is a small probability that we could bounce, and then folks think that we're back in a bull market. Again, I say it's a small probability, and you don't want to necessarily forget this bigger signal that I think is the predominant signal that I've shown you today. So I'll take any questions if you guys have any, or anything that you want to be looking at. But really, for myself, the only thing that I was willing to add today was going to be more energy plays. So, like for example, we added some oil, right? The reason that we added oil, I'm going to show it to you through crude futures, is just because it is starting to hold trend structure. And then if I show it to you on a slightly bigger time frame here, maybe something like a 2-day, 3-day. Ignore the two charts on the left. They're not all that relevant for what we're looking at. So you see how the 2-day and the 3-day here on crude oil? What I'm looking for is for it to be holding trend structure. So this green line right here, it has to hold on a closing basis. And you see these wicks below the line, but they all closed above. That's really good. Also, you have a positive cross here. It's early. You have a positive cross here. It's early. You have a 2-day squeeze with an upward bias. a 3-day slingshot squeeze, meaning that it's going lower, comes up, and then tries to fire in this direction. So those can be pretty powerful. And now you actually have a 2-day thrust signal. You see the arrow there? So the idea is this thrust signal on a 2-day will then feed into the 3-day. Right now you have 2 thrust signals lower. These are kind of like warning signs right here. But the idea is, and we'll see if it plays out, but the idea is that the daily and the 2-day with this thrust signal actually turn this one, give you a thrust signal here, and then you'll be pretty much cleared for takeoff on oil. So one of the cleaner setups that I'm seeing, it's just a little bit outside of the market, right? It's not going to be a Tesla stock or an Amazon here. I think for all of those trades going into tomorrow, one, I think if you're going to trade the market here and you're trying to trade a short squeeze, really where I think you should focus is actually going to be like semiconductors. I think there's a lot of kind of stored energy there. But if you want the easiest setup, then in my opinion, it's crude oil or any of these energy stocks that are in this list here. And then also keep an eye on things like Coca-Cola, CF, wheat, Monster, things like that. So that's kind of my song and dance there. If you guys have any questions, do throw them in the chat, and I'll just start going through the chat here as well. So how do I have those horizontal lines drawn on the chart? These are support and resistance levels, so you can see them. They're just automatic. You must be talking about these right here. Yeah, these just automatically plot against previous support and resistance, and it just makes it very simple for me to be able to quickly tell where the level is. If you want them, they are actually they're called swing levels. However, I think they're actually part of a package or a class. So I'm not here to sell you anything. So I can tell you how you can get them essentially kind of the same idea for free. If you check out Ragi's website, RAGHEE.io, she has something called Darvis. And even though I do prefer mine, hers are free, and it essentially captures the same idea, right? At the end of the day, really all it is just automatic support and resistance, right? So you're talking about like these levels right here. Yes, so go check that out if you're interested in something like that. Check it out. It's called what should you call it? Darvis, Darvas. You could just do a Google search for that and put her name next to it, and it'll pull up. So you can get those for free. If you want the ones that I use, they're called swing levels. So you can look that up as well. Amazon, Apple, and Tesla. 4 sides of the same coin. All right, we'll check those out quickly. I don't really think there's a ton of nuance in any of those, frankly. I already did the work for this from this weekend, and although there's a slight edge to seeing a short squeeze this week, based on the market-wide positioning of everything, I didn't see a ton of edge in any of those names. But at the end of the day, if you get a short squeeze in the QQQ, they're all going to participate, right? Because they're all such heavyweight tech stocks. So we'll start here with Amazon. I don't think you trade really Amazon here. We don't want to trade things usually long if they're below 200-day simple moving average. We definitely don't want to trade things long that are below their weekly 200, right? So I do acknowledge that Amazon does have a reversal candle here. This is a proper reversal candle. The momentum is really beaten up. I don't yet have a trigger, right? A trigger would be closing above kind of these recent lows, as well as closing above the daily 8, which it has not done. Right. So you're going to have to kind of wait on this until tomorrow, because either it all happens and every tech stock and every stock would go up, or it's going to fail here. Right. But just usually from a trading perspective, if it's below the daily 200 and the weekly 200, it immediately doesn't make the list. So I have no interest in Amazon here. You mentioned Apple. Apple is going to be a little bit more dynamic, right? You can see that it doesn't have the Amazon problem, although it's becoming a problem. So here on Apple, you are above the 200. The 200 is down here somewhere. So immediately it's better than Amazon. I don't love seeing this break of support. You see kind of that support level there, and last week blasted through it with big volume. it triggered the squeeze, and you have nothing but sell signals here, right? So what do you have here on Apple? Well, you have this low, right? We can just kind of call this a common low right here, just a big common low. You have this high, and then you have a lower low, and frankly, a lower high in there, right? So none of these are really attractive to me. And of course, they're all going to look the same. Apple's going to be better than Amazon, but that's not really saying much. And then lastly, let's look at Tesla. Excuse all the crap on this chart, but I have a lot of crap on this chart. Tesla's kind of in the same boat. Tesla's kind of in the same boat. So let me show you actually what I'm looking at here, because all of these are basically one thing. So the one that I was looking at this week, the only tech stock that I will entertain long this week is going to be AMD. And the reason that it's the only one that I would entertain long is because it's the only one showing me any type of outperformance short term. So let's keep it simple. You asked about Tesla, Amazon, and Apple, right? I think Apple might have been the strongest one you brought up. So let's just look. Let's just see what it looks like. So here on Apple, just keep it near term, right? Just look. Let's look at the daily chart. Here's the daily 8 moving average, and here is kind of the bar that would kind of drove action lower. So you see how if we use this as kind of the benchmark would be 155. And then we look at the daily 8 as another benchmark, which is roughly 150. You see how this entire zone right here is untested, and it's essentially kind of a brick wall, at least visually for now, because it hasn't been tested. You have to believe it's gonna get there and fail. But more importantly, let's just keep things simple. You see how it's below the daily 8? If you look at AMD here, AMD has now had 2 closes above the daily 8. So I've already done the work here, so I already know how this grades out. You see how on AMD you have a double bottom. You have a close above the level that I would have given you, right, which is roughly 94, 93. And here's your daily 8. And you see how it's curling up, and you have 2 closes above that? That alone tells me that this pattern, if the market is strong at all, right? Like the only thing that would take down this pattern at this point is, if the market pukes. But this is a much more favorable pattern. You have the double bottom, and you have a little bit of a 1, 2, 3 thing going on here in a much more in a much stronger chart. So I can look at tech names, but here's the thing: there's a specific reason that if you look at my watch list and you look at my miscellaneous longs here, how many tech names do you see there? There's 2. It's IBM and AMD. So you have to be very selective with those. I will leave you with one more thing here. In the event that you do get a short squeeze, the biggest junk in tech is going to move the most. So Lucid, Rivian, Shopify, all that garbage, Peloton, Zoom, Teladoc, all the crap that Kathy Wood owns, that's all going to move much, much bigger. But if you want to give yourself edge, the edge really this week is still here. Facebook, I haven't really looked at Facebook too much. It just doesn't do anything really special, but I'll take a look at it. It's still just not doing anything really special. It has more of a bottoming structure than something like Amazon, just because it's already been destroyed. But the same rule would apply here. There's no reason I would ever trade this long. You're below the weekly 200. You're below you're below the daily 200 right there, and the weekly 200 right here. So I would never trade this long. If you're looking to trade something that's an XLC, Google actually grades out the best. Google is actually the strongest looking FANG stock this week. So Google here, you see how it has kind of an AMD type of double bottom? It's just weaker. So I just showed you the double bottom on AMD. There's a low, there's a low, there's the flat bottom. Here's your swing highs. It's kind of working on one of these guys here. Now, granted, AMD had a couple closes above the 8. This one couldn't even hold above the 8 for a day, for 2 days. And it hasn't even tested the 21. But I think if you're going to trade XLC, Google is actually your short-term leader. Good to see Anders. SLV, gold, BMY. Okay. Yeah, we'll go a couple more minutes, guys. I just kind of wanted to, the main thing I really wanted to come across to you guys is just a couple points of one, understanding kind of the multiple time frames that you should be looking at, and you know, and then the big picture here, right? Because I don't know if everybody's seen this, and I just think it's so drastic that I have to focus on it. Does it mean that it's right? Well, you know, not necessarily, but this indicator is pretty good, and it would have got you out before the crash, and it would have got you in on a generational buy, and it would have kept you in a generational low for 13 years. So why would I start to doubt it now when it tells me that the party's over? So that was kind of one of the main things I wanted to bring you. And then again, just kind of how to understand the big longer term view, but then also be able to work inside of that and trade these kind of smaller swings. So somebody wanted to look at, and I don't see any comments on Facebook here. I also don't see that it's live. So Amelia, if there's any comments on Facebook there, if you could post them in on YouTube, and I'll check them out. SLV. So, geez, the metals are just so difficult here. They're just so difficult. There's just no reason to trade them. They're really just, in my opinion, there just really isn't. I love silver. I have to say this. I love silver. There was a point in my life where I actually owned 5,000 ounces of silver, which is a lot. If you do the math, it's like 300. It's almost like 350 pounds. So I love silver and I love gold. There's gold coins and silver coins sitting on my desk, right? I truly do think it's God's money, but the chart just sucks. It just really sucks. Now, here's a couple things. One, you asked about SLV. I pulled up SLV and I'm happy to look at it, but in reality, you shouldn't even be looking at this. You should be looking at SI, which is the futures contract. So we'll go there next. But point number two, if you want to be long silver, despite this disgusting looking setup, right? This is a wretched chart. Look at your lows here. You see the lows? See how you're trading below the lows? You kind of have a little bit of a box. Now you're trading outside of the box. And in doing so, you triggered your squeeze. This is incorrect. You had a sell signal that would have got you out pretty good, and it hasn't bottomed yet. What you want to see here is a bottoming signal. You have none of that, right? So my true advice to my younger self, who's wasted a lot of money and time trading this stuff over the last 10 years, don't trade it. Don't trade it. Leave this to somebody else. This is just too difficult by design almost, right? So here's the thing. If you want to trade silver, what you are hoping for is at this low, you see green lines down here. You see how they're printing in the low? What you're hoping for is that this is a bear trap. Essentially, everybody sees the same line. I mean, you just draw a line across the screen. It's pretty easy, right? And guess what? Everyone has stops right there on the other side of that line. People aren't that special. Everybody has the same stop. So what you're hoping for, and at least this is a decent start. You see how it's back above the green line after today? That's a start. But you don't want to be doing this in trading, right? You don't want to be picking up these little tiny breadcrumbs of clues of stuff when there's stuff like this. Like, let me just show you perfection. So then you have Oxy, right, which we've been calling out for some time. Look at Oxy here. I mean, you're not compromising at all. This is just perfection, right? I mean, you have squeezes. There's a 2-day squeeze. There's a 3-day squeeze on this thing, right? So there's plenty of meat left on this bone. It looks extended, but it's not based on the squeezes. And then you see how your trend oscillator is green over red the whole time. That's perfect, right? If you want another one that's perfect, MPC. Or just go back and watch the recording of this and just check out anything that I put in this list. See how MPC here? I mean, look at that. That's perfection. If you look at Coca-Cola, right? Kind of boring, not as exciting as gold miners, but look how perfect this is. So this is the kind of stuff you want to trade to make money. Let me round out the question here because I don't want to just beat somebody up for asking about silver because I love silver too. So let's look at a longer term point of view on silver. I think if you're looking to buy metals, you can probably wait until the end of the month. If metals are going to bottom, they should bottom at the end of this month. with silver ideally closer, silver futures ideally closer to about 20. So now we're looking at silver on a quarterly chart. So we're going real long term here. We got a quarterly, we got a monthly, we got a 3-day, we got a 2-day, right? Just so you understand what I'm looking at. You see how the monthly chart is giving you thrusts lower? You don't want to see that. You see how your 3-day chart has given you thrusts lower? You don't want to see that. You see how sloppy your trend oscillator is? That ain't good. So you see how your monthly squeeze, let me zoom in here. You see how your monthly squeeze has a heavy downward bias? Look at that. You see that? So you're probably not looking to short this stuff, nor would I, because it's still not weak enough short, but it's too weak to go long. So I spent a little bit extra time here just because the main message around this is don't trade it. That really is the message. Don't trade it. Find better stuff to trade. Oil is better, wheat is better, oil stocks are better, Coca-Cola is better. There's lots of better ways to make money. Gold, same thing. Gold, same thing. I would say waiting on the metals, wait until the end of the month. Wait for that monthly candle to close, and then wait for a higher low. So, for example, I'll bring up GLD real quick. I mean, look at GLD. I mean, this is just such a heartbreaker. Look at this. You have like this idealized breakout triangle, and it can't do anything with it, right? I mean, this is just classic gold. Look at this breakout triangle. And you have like this huge overreach, and then it gives it all back, right? What you don't necessarily want to see is this right back into the triangle. Yeah, I mean, there's just nothing for me to do here. That really is the answer. I would say wait until the end of the month. BMY and SO. Yeah, and then we'll wrap it up here soon. There we go. Yeah, now you're talking. Now you're talking. Yeah, this is the kind of stuff you want to be in. This is rather ideal. Good find. I didn't even have this on my watch list, so I'm gonna write this down. BMY. Yeah, and notice here how when somebody asks about BMY, we don't have to play all these little tricks. It's like, oh, is it this? Is it doing that? Is it? You should know right away, right? Your tools should be robust enough and simple enough that when you pull it up, you know right away, right? It's kind of like looking at someone's face. It's like if somebody's looking at me, their eyes are squinting and their jaw is tight and their fist balled up and their eyebrows are furrowed, I'm going to say, hey, that's a really happy person, right? That person's probably about to hit me, if anything, right? So when you look at a chart, make sure that you can really quickly read it. And if you have to kind of squint and turn your head, don't trade that. Trade something else. Like notice how as soon as I pop this up, it's like, oh yeah, this is a go. Why is it a go? Well, it just hits every note. You have static moving averages. You have a squeeze. You have an idealized trend oscillator. You see how perfect your trend oscillator looks? Green above red, red climbing. That's perfect. Perfect. So this is just, to me at least, to my eye, and based on the indicators, this is just a consolidation triangle before it continues on the path of least resistance, which would be higher. This is a great pick. I don't know how this didn't come up on my scans. Holy crap, this is a fantastic pick. Kudos to you. That's a good pick. See, we don't even need to say anything more. Let me just kind of get a target here. I might have to buy some of this tomorrow. So let me just get a quick target on this thing. If you can pick it up closer to 76 1/3, I think it's a little bit easier. Puts you in a better spot, but you'd like to take this into about 79.5. Great setup. Just because you brought such a good one, I'll look at the next ones. SO. This is what utilities. This is okay. Kind of the same idea, but it's not as strong. The one that I was looking at that's a utility was what was it? XEL. Let me see if yours is better than mine. No, mine's better than yours. So I would counter your SO with XEL. And the reason I would just keep it very simple. They both look the same, right? I can even use the same drawings as the last time. But you see how you're squeezed rounding out to launch. You have good trend oscillator there, and you have this thrust signal here. But the more important thing is not the thrust signal. It's the fact that the green line never went below 50. That's good. That shows persistent strength. If you look at SO, They look the same. It just looks a little weaker. It's the same idea because they're both utilities, but you see here on SO, you actually have a thrust lower, and the green line is going below 50. So if you're looking at SO, I would actually defer you more towards the XLE or XEL. Same idea, better setup. Great pick though on BMY. That's a really good pick. Somebody get that man a free membership for that pick. Carvana, I mean, God bless. Here's the thing. If the idea that I shared with you to start the session around a short squeeze after Fed, and mind you, these edges are thin, right? So don't think this is in the bag. This is like being up by 2 points in the Super Bowl, and Tom Brady has the ball with 2 minutes to go and 3 timeouts, right? Like, yeah, you're ahead, but it's Tom Brady, 3 timeouts, and all he needs is a field goal. So that's kind of the spot that we're in for tomorrow. But in the event that the defense can stop Brady for once, in this case, the Bulls can actually stop the Bears for once. This is the kind of stuff that's going to have a gigantic move. Now, you don't typically want to make a habit of buying this, right? Because it has all the classic, absolute, disgusting downtrend, right? It's evident everywhere. You have sell signals literally everywhere. Sell signals here, sell signals here. Everywhere. I mean, you got sell signals back here in March, and those have not reversed at all. And this is an intraday time frame. So here's the thing. If you get the squeeze, crap like this is going to go up like 10%. But by and large, you typically want to make a habit of buying better setups than this. So it's kind of the way that I would view Carvana here is really no different than if you were to buy the TQQQ, the triple Qs, because that's all it really is. It's just going to move disproportionate amount. I mean, it's got a bottom somewhere. I'll tell you this on Carvana. If it can get a close above the daily 8, just one, it hasn't had a single one. If it can get a close above daily 8, at least it breaks the pattern that it's been in. But I normally wouldn't trade this. There's easier ways to make money. All right. Might be the last question of the day here. Mondelez. So here's the thing. I looked at Mondelez this weekend, and it doesn't beat. So I think this might be a good topic to close on here. So here's a thought process. If I ask you, what sector is Mondelez in? Can you answer that question off the top of your head? What sector is this in? I'll wait for somebody on YouTube to throw a guess out there. And don't cheat. Preferably the person that asked about it. Roman Ray. MDLZ, what sector? Not a bad pick. Not a bad pick. It sounds like I'm about to beat you up a little bit. I'm not. But there's ways to be a little bit tighter in terms of your selection. So it's an XLP. A couple of folks guessed it right. It is an XLP. Right. So let's do this real quick, and this will close out our session. So before we look at Mondelez here, let's go to XLP. And what we want anytime that we're going to buy something is for it to be the best thing, or maybe rephrased it more accurately. We want it to look better than the sector. So anytime that so think of the sector as like the neighborhood, and think of the house, or think of the stock as the house, right? You don't want to move into a shitty neighborhood, right? You don't want to have the best house in a shitty neighborhood. It's okay to have the worst house in a great neighborhood, but in this game, the game is find the best neighborhood and find the best house. So we're looking at the neighborhood now, which is XLP. So let's see if we can kind of make sense of things. So this is XLP. You see how it's above its weekly 21. It has kind of a base here around the daily 50, and today it closed nominally above the daily 21. Right. So that's all we really need to know for now. We might need more, but just for now, let's just understand that it closed above the daily 21 and it held at the weekly 21. And everything is, and the weekly chart is perfectly stacked. Go to MDLZ next. So I would actually say that you've done your job so far. Why? Because We just looked at XLP, and if you look at MDLZ, Mondelez here, it actually looks better. It actually does. So you've already somewhat done your job because you found something that looks better. Notice how Mondelez here actually has stacked moving averages all over the place. So if we like XLP, we have to like Mondelez more. Here's where you can go an extra step, though. Let me show you KO, which is also in XLP and is the one that made my list. So you see here how on KO, you actually so let me preface it by saying you actually did your job by finding something that looks better than XLP. So hats off to you. But there's a way you can go a little bit further, because now you found the house is better than the neighborhood. But let's see if you can find a better house than the one you're in. I would argue that Coke is actually that, right? So from what I was looking at this weekend, this one just has the best signals. So why is that? Because if we so we'll compare Coke and Mondelez to close the session. With Coke, you see how it's above the weekly 8. It's above the daily 8. You have a slingshot squeeze, a thrust signal, and your trend oscillators correctly positioned. Let's go to Mondelez. Frankly, Mondelez isn't a bad setup here. I thought I was going to be able to beat this up a lot more. This is actually a pretty good setup. I don't think it's as good as Coke, but this is actually a pretty good setup because you have a squeeze, you have this correct, and you have this. I would say probably where you have a little bit more edge is actually on the weekly time frame, because if you look at Coke, let's just work off this. Not bad signals here on Mondelez. These are very workable signals. My point that I'm trying to make here is just always try to find best thing in that neighborhood. So let's go back to Coke one more time and then we'll close out. See how Coke just looks completely better in terms of the weekly chart? Take a snapshot of what that looks like with the green well above the red, this having no sell signals and perfectly stacked moving averages, and then you have Mondelez on the left. Not bad, though. Not bad. I thought I was going to be able to beat you up a little bit more. This is not bad. This is okay. It's not as good as Coke. This is okay. It's not as good as Coke. And this is okay, although it's not as good as Coke. So I like where your head's at. You definitely did your job of finding something that looks like XLP. I just think Coke and frankly Pepsi look better than this. Also, one last thing I'll add to this, because I lost a little bit of money earlier this year trading this. Be aware it's a little thin, and also that it has Russia risk. For whatever reason, Ukraine has MDLZ risk. It's like 8% of their sales go through Russia. So neither here nor there. But in the event that the charts were a perfect tie, they're not, right? Coke is the better one. But in the event that you had a perfect tie on the charts, just a little bit of fundamentals there to break the tie. There was one more that I was looking at. Philip Morris here. So Mondelez kind of reminds me a little bit more of Philip Morris here. So just a couple more to check out there, but I think you're on the right track. I like the question, and I think you're on the right track. All right, guys. Well, I think we made it. I don't know how long this was still to go for, but we went 50 minutes or so. The main thing I would say, if you got here late, just go back and watch the beginning part of the session. This wasn't intended to be chart review, right? We do that all the time. You guys had some really good picks, though. Hats off to you, especially BMY. That was a really good one. But mainly the main thing that I wanted to stress to you guys was kind of the three-dimensional speed of thinking. So, for example, understanding that this is the big picture, and understanding that for the first time since 2009, these were 2009 buy signals, right? Some of you have kids that aren't even, that were born after 2009. Your kids have never seen a sell signal on Qs their entire life if they're under like 12 years old. And now that's changed, right? So that's the main thing I wanted to stress. However, the second point was, in the intermediate term, tomorrow's the big game, right? Tomorrow's Fed, and we are coming into this week with a bunch of weekly hammer candles and some reversal signals. Are they strong enough for me to want to load the boat into tomorrow? Blind? No. But do we have to be on guard? Because can we put in a very short term yet important tradable low tomorrow after Fed? Yes. So be on guard for that. And then the third point is really try to focus on where you have the most amount of edge. So my challenge to you guys to leave the session here, and feel free to email me if you find anything better. The best setup that I see in the market, these two stocks right here, Oxy and MPC. Yeah, I'll throw in Coke. Why not? I'll give you 3. So my challenge to you, if you find one stock in the market that looks better than Oxy, MPC, or Coke, email it to me and you win the day. But in the event that you can't, just focus on where there's energy. And, there happens to be energy in energy. So I'll leave you my list here one more time. And then we'll do a little webinar here on Wednesday for the story of the week. For those of you guys that might be interested in having somebody else do your homework for you, so that you can have a life over the weekend and still have some edge to start your trading week. All right, guys. Thanks again for being here. Really appreciate it. I mean, anytime that you guys do anything after hours to make yourselves better traders, I always really do admire that. I remember when I started trading in 2006, 2007, and I didn't put in this much work as you guys have. I've certainly caught up. I've certainly put in the work over the last 10 years, but to start out, um, I wasn't doing all the extra stuff that I see you guys doing, and it's really admirable. And just stick with it, right? Be better every day. Pick up one bit of additional information every day, and this is the best vocation you could choose. So it's a great time always to be able to speak to you guys. And thank you again for being here. All right, guys. I'll see you next time, and I hope to see you guys at the Wednesday webinar. Cheers.